This video refers to real estate strategy. It focuses on the long-term view that a real estate developer or an investor must have in their businesses to maximize their value. Should the sale of a building be the ultimate objective of a real estate development? Really? No. The land, its location, the construction process, and the building itself are just some of the means to achieve a specific business goal. Of course, in a market society, like the one in which we live, somehow people need to transact something. Because otherwise, they wouldn't be able to recover the invested capital to pay and satisfy the investors. There would be no resources to do it. But to provide the market, does the businessman need to sell objects like houses or cars? No. The end goal of the market demand, especially in the 21st century, is the space-time with certain ambiences, which would be suitable to human use and their activities. In order to recover the invested capital within a short period, through a traditional approach, it is required to sell the property. The model only works as long as someone is interested in owning it and if the bank is willing to finance. This has been the paradigm in the last 60 years, with the rise of the middle class, which was stable and got jobs for life. Then has supplied the bank system with its saving and thus allowed the provision of mortgage credit. This paradigm is now changing, albeit in a sensitive way. The youth are giving up the option of buying their home. The modern business is dispensing to own the property assets they are settled. In the new economy, little by little, people are less focused on ownership but more on sharing assets, working in networks, needing more flexibility, and being less static. The paradigm is changing. These prefer to use the space conforming to their needs. And to compete and create value, customers require the integration of services to users, appealing to perceptive issues, some of them very intangible. Happiness, creativity, and experiences are some examples of these intangible, valuable issues, as well as interaction and communication with each other. In the traditional real estate business process, except from some cases, it has been disregarded the contribution to the value of the building use and operation phase. Traditional real estate developers have lost businesses in this final phase. The sale should focus on space-time in its ambiences and all services provided. In this case, customers tend to agree to pay more for the time they enjoy when using those facilities. The main income is in the dynamic sale of value-added services focused on clients. When capitalized in the long run, this income tends to be higher than the result of the estate property sale in the traditional market. The long-term market approach has been more difficult for traditional developers, who usually tend to be very decapitalized. Therefore, they need to recover quickly the invested capital in order to write off the loan to the bank. Real estate projects need long-term financing, and so they require investors with a long-term and patient vision, such as Warren Buffett, who is the most successful. Fortunately, the market is always evolving with new opportunities and financing models, with solutions to attract large amounts of capital, such as the institutional investors, which, slowly, are leading the world capital markets. When they represent and manage the aggregated interests of lots of pulverized private small savings, and, maybe, switching to a somehow shared capitalist model. And, by these means, capital could be attracted to invest in long-term real estate income assets through securitized vehicles, such as the Real Estate Investment Trust or REIT, or CG in Portugal. These vehicles operate through the transaction of securities that each one represents a tiny portion of the property ownership rights, and then can be dispersed to millions of worldwide participants through global networks such as the Internet, and be represented by a single one institutional investor. Through this business model, it may split up the strictly real estate business, which depends on rent, from a distinct activity based on value-added services sold on this platform. Therefore, people can enjoy experiences and services only the time they want to use. And companies may improve their results because they dispense with the capital previously invested in real assets and can apply it to improve their own performances. On the other hand, real estate entrepreneurs can improve investment results when they minimize transaction costs due to property, such as property taxes. More, they can minimize capital gains due to previous property owners, and may still recover the VAT consumed throughout the construction phase and its equipment acquisition, with the sale of the value-added services. In the long-term approach, the business based on a real estate asset should still earn much more by the sale of use time throughout all life cycle than of the one-time sale of the property. Thank you. If you enjoyed the video, please click on the like button below, and don't forget to subscribe to the channel. If you want to be notified, click on the bell. Thank you.